Good morning. The news flow is very much driven by the US-China negotiations at the moment. And this morning, the Chinese Commerce Ministry announced that the US and China would suppress all existing tariffs. Futures on equity markets shot up and in the US made intraday all-time highs. We believe this blow-off may continue over the next few weeks. This is what we're going to consider today. To do that, we're going to use our fingraphs.com platform and first consider the mini S&P futures on an investor's view. An investor's view is a combination of a weekly graph for the perspective over the next few quarters, a daily graph for the perspective over the next few months, and an hourly graph for the perspective over the next few weeks. What we can see is that all three frequencies are still in an uptrend and possibly heading higher over the next few quarters, next few months, next few weeks. On the target front, we are quite exaggerated already, which means that the remaining upside potential does require some leap of faith. What we could see is that we've pretty much reached our impulsive targets to the upside on our weekly graphs, although the risk index is not quite overbought yet again. So that would leave some leeway over the next 1 to 2 quarters. On the daily graph, we can see that the risk index is also still well below its overbought zone, and it could still accelerate up over the next few months. We've pretty much reached our impulsive targets to the upside. The upper end is towards 3,120. We may want to start calculating our extensive 2 targets, which could lead us up into the 3,200s, 3,300s, and we'll have a closer look at that afterwards. And finally, the hourly graph is onto new highs and also probably heading up into the low 3,100s over the next few days. The risk index here is also still quite below the overbought zone. So let's look at the daily of the S&P 500. We can see the risk index here, which still has some leeway to the upside. We expect a further acceleration over the next few weeks, probably with an intermediate top towards the end of November, early December. Until then, our impulsive targets are almost reached towards 3,120, yet we can calculate our impulsive 2 targets. The delta, so the width of our larger envelope, is about 300 points, which we would add to the lower end here, which leads us up to 3,200, possibly even 3,300. Now, looking at the Euro Stoxx 50 graph, we can see that the weekly still has some potential to the upside and is still in an uptrend. And we could also see that the risk index is getting close to the overbought zone, but it's not quite there yet. Similarly, on the daily, we're heading higher. Also, the risk index is still below the overbought zone, and the trend is still moving higher. If we look at the hourly graph, we are breaking out at the moment to new highs and possibly accelerating up towards 3,730 over the next few days. If we look at the daily here, we could also see that the targets are pretty much reached, but that there's more leeway here on the risk index. We'd have a similar analysis as in the US, possibly a few more weeks of upside of acceleration, possibly towards late November, early December. And here we have about 400 points of delta. So if we add it on to the 3,487 here, it leads us up to pretty much 3,800, perhaps a bit higher as a potential target. Now, looking at other assets, we first looked at currencies. On the top line here, you have the hourly graphs. On the bottom line, you have the daily graphs. And first at the euro, which had been bouncing for the last month and a half. We believe that this rebound, this correction to the upside is not quite over yet and could extend another month or so and possibly retest up towards the high 112s, perhaps the 113s. And it had been consolidating over the last few days. We believe it reached pretty much its targets to the downside, its corrective targets to the downside, and that it may be ripe to start reaccelerating higher. Looking at dollar yen, we can see that it has also been in a rebound over the last couple of months. It is still in a corrective move up, but we believe it will probably go up and test the upper end of these corrective targets towards the high 109s, 110. And on the daily graph, it has started to reaccelerate up and should continue to do so into the high 109s, into the low 110s. Gold has been consolidating down since early September. It hasn't broken down yet thoroughly. but it seems that we may have a chance here on the hourly graph. Our support, corrective support, is towards 1476. So if we do start moving below that, we think there's an acceleration down, possibly towards the lower end of our targets, into the low 1400s over the next month or so. Finally, Treasury yields. We're looking at the 30-year Treasury bond future here, which is similar to gold and also seems to be have a chance to break down over the next few days. And if we look at the inverse picture, so the US 10-year Treasuries, we see that we've been consolidating up and should also go, as with the yen, for example, test the upper end of our corrective targets over the next few weeks towards 204, maybe 210. We believe these are decent targets. Now, looking at Brent, which we think may benefit from the positive news flow in China. It has been very sensitive to it over the last week or so. We could see that it possibly finished a correction to the downside, which started in October last year. It has reached its corrective support. The daily graph has started to rebound and is looking at corrective targets to the upside over the next few weeks, which could lead it back up into the high 60s, lower 70s. And if we look at the hourly graph, and we'll zoom on it as our last chart for the day, we can see that we're still in an uptrend, that we were a bit exaggerated here, had a correction, had another little rally here. We've coming down to support once again, and we seem to be moving higher in the trend. So it's a buy the dip situation, and that buy the dip situation over the next week or so could lead us up into the 65, perhaps even towards 66. Thank you very much, and have a good week.